Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Tuesday, and we're at the 13th of December, 2022. By the way, I'll be in Australia TV tomorrow as we do our Aussie Biz, as it's called, and I'll be doing that about 4:30 in the afternoon Central Time, which is the morning there, and it should be a fun show. So let's talk about what happened today because it's interesting. We saw a reduction, not a big one, but we're getting a reduction in CPI and core CPI. They're slowly coming down. They're not going up. I think people don't understand this. In order for the Fed to really get away, and the market's already saying February, by the way, might be the last rate hike. I'm hearing it all over TV. In order for that to happen, you're going to have a pretty stiff trajectory where you keep this number coming down. I don't think that can happen unless the Fed succeeds in impacting wages more than they've already done. Because if people have the money, then as that comes down in the CPI, if they're getting more and more jobs and they keep getting those jobs, they eventually come up and they push it back up because demand overcomes that part of it. You've got to understand that jobs are an equal part of this CPI number, and we're not there. I am not a doomsdayer. I am not trying to say that today wasn't interesting. I am beyond proud today of one of the best Spider ETF videos I put out. I mentioned that one because I did it at 9 o'clock. And the one I do 5:30 in the morning, I didn't know what the Fed was going to do or not do. I was able to react to it in the Spider ETF video. And I was basically saying at the Bollinger Band highs, bail, bail, bail. Well, as it turned out, it was a heck of not a bad call at all. Why? Because you went up there and that's where you normally back off. Now, when we get back to our markets here, did you pay any attention to the swings you were getting? I mean, you were up 800 points. You then went negative on the day. Then you came back. You had 1,000-point swings going on left and right. Not surprising. What do I tell you to avoid from these reports? I know that you hear me say it on every report. You get into what's called a major report. I went on the line yesterday. I said, I think today's CPI will be more important than whatever the Fed does tomorrow because it will set what's going to happen, and the Fed's going to go 50 basis points. They have every reason to now do it. The market's already saying, oh, they can then go 25 in February. No, that's wrong information. They can go 50 now, then they have to see how the December comes out, numbers that are generating right now as we're talking. Then you got to see how January comes out. Then they can take a look at those two together and get to February and see how the CPI is going and how labor is going. It's a combination of the two. The markets always get ahead of themselves. They'll have you going, the market's going to go crazy. The good news is I don't see anything to stop the eventual Santa Claus rally unless Scrooge, in the name of Chairman Powell, Fed Chair Powell, says something tomorrow that none of us expect. I don't know what that something can be, but that would be it. So the dollar got clobbered today, down 116 points, probably overdid it to a degree, but here you are back to the 104 level. Most currencies rallied, and they probably overdid it to the upside to a degree. You're backing off in all the metals, and you should. I mean, you went to $24 in silver. You're here at the 1820s again. Isn't that a familiar number in the gold? 1820, 1828. We've been talking those numbers for a long time. And the copper market really got a lot higher and gave some of that up. So let's take a look and see what we have. When we come to the gold market on a weekly chart of closes, you're up right now for the week, not quite 1%, 0.88. Not a bad game, but not stellar. The market again came to the top of this trading pattern, throwing back. Doesn't mean it can't continue through it, but it attacked it again. And in the process, you have kept the pattern of higher lows, that's what I want to say, and higher highs. Higher lows, higher highs, bullish. If you look at the 18-day average of closes, once the market got over it, it hasn't come back under it. And that hasn't happened, in all honesty, since here at the very beginning of November. Would you agree with that? Now, one of the numbers I told you would be a resistance would be the 200-day average of closes. That is the number right through here, and the Bollinger Band is right with it. To me, that's a brick wall. You hit that wall, I think the pros do one thing when you're not embedded. Buy. It's yours. I don't want to own it right here. I'll look to come in on the breaks again. That's what I think the professional money is doing. When we get to the gold-silver ratio, silver, as long as this number's falling, is getting stronger than gold. And the silver market is running the upper Bollinger Band. It hits it, it backs off. It hits it, it backs off. This is just classic, pulling the market along. Will it embed? What is embedding? Embedding is when the slow stochastic numbers both get over 80 and stay there. Now, you can't count Wednesday because we don't know how the day's going to finish up, but we can certainly take here a look at Tuesday. And Tuesday, both numbers were over 80, but not the day before. You're just in an overbought situation where the pros are probably coming in on breaks, but I don't know that these are deep enough. I think this one was. I'm not convinced these are. And pitching out some of their longs against that number. In the copper market, you tell me that you don't have resistance here at this 200-day average. Look, you've now over the past 5-6 days, that has been the resistance point. They 1, 2, 3, after the past 3 trade days, today being the 4th, it has been having its resistance there. And again, it's not embedded. I say the pro money is taking money off the table at that number. Bye-bye. Now, how much of it, that's up to them, but that's what I think they're doing. Same thing in platinum. In the platinum market, I've been waiting for this to occur. We talked about it here just yesterday. If it's going to go, it's probably caught in these bands. I think it'll fail against the upper band and find support against the lower, if it can get to the lower. If we take a look, you went to the upper band today. Tell me you didn't back away from that, and that's just what you've done. And that's what typically happens when you hit the Bollinger Bands for the first time. And in the palladium, the same darn thing. Then we get to the dollar index. You went to the lower Bollinger Band. You're not embedded. I'd be telling traders, you come out of the market. So it's important you learn them. Do Bollinger Bands always work? No. They had a losing trade, a nasty one, by the way, in the heating oil market, but they get plenty of winners year out. When I look at the win-loss ratio on the band itself, I am amazed at how it does. I want you to learn it and make your own decision as to what you think about it. So it's not a matter, oh, this is in a black box, you can't learn this technique, you can't judge it, and you can't back test it. You can do all the things I just said. I teach it via videos. You step in, you look at the video course, you go, oh, wow, there it is. And I give you the examples of spiders, ETFs, stocks in the futures markets. You name it, if you can plot these indicators on it, you can lay them on there and work with this yourself. How do you go about doing it? Well, I created this little piece for you to look at. Give it a moment. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.